Hello everyone, welcome back to this edition of Commodities Weekly Audiocast with me, your host and guide Ravindra Rao from Kotak Securities Commodities Research Desk. As always in this audiocast, I'll guide you all on how commodities behaved in the previous week and what are the factors and levels to watch out for in the new week. Well, it was indeed an interesting week for commodities as everything from metals to oil rallied except natural gas. A solid recovery in crude oil after registering new low since Jan this year. Precious metals rallied with silver dominating the week with a whooping gain of around 8%. Copper, aluminium, zinc, everything rallied between 3 to 3.5%. The week was full of action with the important economic data releases from US along with all important Fed chair speech. Although the data prints were mixed, market focused on Fed chair speech who sounded more than dovish that pressured the US dollar and softened the yields. The US dollar started the week on a positive note as civilian protest in China and amid China's strict zero COVID policy raised the threat of a government crackdown and increased concerns of an uneven economic recovery. However, tensions did not last long as Chinese officials responded swiftly to protest against stringent COVID curbs and relax some of the restrictions in few cities. Also, measures to shore up the property sector via 16 steps outlined by regulators and credit support for cash-strapped developers calmed investors' nerves. Later in the week, the dollar witnessed a major pullback after Fed Chair Jerome Powell said the time for moderating the pace of rate increases may come as soon as December meeting. Although he cautioned that the fight against inflation was far from over, market chose to focus more on his affirmation of slower rate hikes. Along with that, largely weaker economic data from US signaled that Fed's aggressive rate hike path has limited consumer and business spending. The only exception being better than expected labor report, with the U.S. payrolls increasing by around 2,63,000, while jobless rates remained unchanged at around 3.7% in November. Although the US dollar index recovered after the NFP print and went above 105, but it ended the week close to the weekly lows near 104.38. The US dollar fell around 1.33% in the previous week, falling for the second straight week. Focus will now shift to ISM Services PMI and US Producer Price Index data before the all important Consumer Price Index and FOMC meeting in the next week. Although a 50 basis point hike in the upcoming FOMC meeting is a certainty, traders will keep a close watch on the November inflation numbers to take a cue on Fed's further stance beyond the December meeting. Additionally, traders will continue to keep a watch on developments in China related to COVID policies. On the price action front, US dollar index has closed below the support of 104.97 and is set to hit the next support zone near 103.11. The earlier support of 104.97 to 105 would become the resistance zone now, followed by 107.60 as the next best resistance. After sharp pullbacks, some bounce can't be ruled out. However, any retracement might attract selling provided the data prints point towards a slowing US economy. Coming to commodity specific, starting with the precious metals, as precious metals have witnessed solid gains as they have been the biggest beneficiaries of slower rate hikes by Fed, as it is a non-yielding asset. COMEX gold inched up by 8.71% in the month of November, gaining after straight 7 months of fall. MCX gold gained by just above 5% month on month, as depreciation in Indian rupee against the US dollar capped the gains. COMEX silver gained by around 16% in November, whereas MCX silver rose by 10%. The month was dominated by the fact that Fed will be slowing the rate hike pace in their upcoming meetings that pressurized the US dollar and pushed the bullion higher. Although price went higher, investment demand indicated that investors are still not confident in the in bullion, as the U.S. inflation is still much above the Fed's target rate. Fed has indicated that interest rate peak might take more time as previously expected. Focus will now be on the November inflation report that will be released next week along with the FOMC meeting for December. Till then, precious metals might trade sideways and some corrective dips can't be ruled out. On the price action front, although COMEX gold has closed above the 252-day moving average resistance near $18.05, it has to sustain above the break candle high of $18.19 on a closing basis. Additionally, a falling trendline second reaction high near 1825 might act as a second hurdle. Having said that, the bulls will have to keep the price above $18.25 for the next leg of rally towards $18.84. Till then, the range would be $17.78 to $18.25. On the MCX, bulls have closed the price above the resistance near 53,670. However, price needs to close above 54,000 for the next leg up towards 55,000. Till then, possible range in MCX gold would be between 52,800 to 54,000. In case of COMEX silver, price has convincingly closed above the $22.50 mark and is headed higher. The next resistance slash target would be near $24, followed by $24.50. Immediate support would be near $22.20, followed by 252-day moving average support near $21.67. On the MCX, silver has moved above the resistance of 64,200 and has sustained above the same. The next resistance slash target the bulls would be eyeing is 68,000, followed by the psychological 70K. Support now would be near 64,200, followed by strong support near 62,000. Coming to energies, WTI and Brent crude both rebounded sharply from 11-month lows on reports that OPEC Plus may cut production at their upcoming meeting on December 4th. However, there was no surprise in the OPEC Plus meeting today as group left production unchanged as Brent crude futures comfortably moved above 80 per barrel. This appeared to be the most likely scenario. In October, OPEC Plus lowered production quotas by 2 million barrels per day, and those levels will remain going forward. The group will keep a close watch on Russian exports as G7 Russian oil cap goes into effect from Monday, December 5th. Although G7 nations have not yet agreed on a certainty on what will be the price cap, it is expected to be $60 as per the latest talks. The price cap of $60 won't have much of an impact as Russia is already selling at a discount. The risk would be on Russia's measures where they have already threatened to not to sell oil to countries adopting the price cap. Another factor oil traders will be looking at is the China COVID situation. China's pushing for vaccination of the elderly was seen as crucial move for a reopening and buoyed hopes of an improved demand outlook. On the price action front, a positive divergence between RSI and price and a piercing candlestick formation has pushed prices of WTI and NYMEX crude oil higher from the lows. However, $81.50 would act as the hurdle. The price has moved above that, but bulls have failed in closing the price above 81.50. A break and close above $81.50 would push the price higher towards 52-day moving average resistance near $84.50. Till then, price might trade between $81.50 to $76.50. On the MCX, bulls need to close the price above 6680. In that scenario, price might move towards 52-day moving average resistance near 6950. Till then, price might trade between 6670 to 6350. Finally, on the metal front, all base metals rallied in the previous week as softening COVID curbs in China and stimulus report for battered real estate sector with China Securities Regulatory Commission lifting some multi-year restrictions on stock sales by developers. This has brightened demand prospects. In the week, markets will closely watch final services PMI figures to gauge overall business activity in major global economies. Besides, China's inflation figures along with US PPI numbers will throw some light on price pressures, all of which are expected to either slow or remain unchanged. On the price front, copper has regained strength after a corrective move in the past few sessions. The bulls have kept the price on a closing basis above 686. This is for M6 December contract. The bulls might now target the previous high near 711, followed by extreme target near 725, which is the 252-day moving average resistance. MCX aluminum December contract has moved above the neckline of an inverse HNS. The bulls might now target 229, which is the 252-day moving average resistance, followed by 233, which is the target as per the inverse HNS. Immediate hurdle in case of aluminum would be near 219, which is the earlier swing high. Well, with that, we come to the end of this weekly commodity audiocast. I hope this analysis at the start of the week helps you all to take an informed trading decision. For this week, keep a close watch on the G7 price cap on Russian oil as well as Russia's response, if any. All the best, trade safe.